Hey everyone, Mika's coming at you with another daily update video. It is currently 7:26 on April 27th. That gives us about 34 minutes until the daily closure. And I gotta say, guys, this week is probably going to be an exciting week. I am very hopeful that we're probably going to see at least $1,000 move, whether that be to the upside or to the downside. I mean, that's anyone's best guess, but we will be looking at a couple different options here in today's analysis. We're going to be talking about specific targets for the medium. I would call it the medium time frame. Maybe not so much the long time frame. Depends how you define them. Medium term for me is like the next couple of weeks. That could be anywhere from like the next week to the next month. Anything beyond a month, I consider more long term. But yeah, we're going to be looking at a medium time frame and then also looking at a lower time frame. And I will be showing you guys a new method that I'm looking into using specifically Fibonacci retracements. There might be a lot of Fib retracements in today's video just because I've been taking a deep dive on those and trying to figure out the different ways of using them on both higher time frames and lower time frames to try and establish a better understanding of the tool and hopefully yield moves on medium and short time frames. So let's get right on into it. We're going to be starting on my layout of my chart, or the chart layout that I use generally for bigger time frames. So we have looked at this chart for the past couple of days. It might look a little bit different. I have a couple target zones drawn up. These are simply, what is my target zone about if this is going to move to the upside, and what are my target zones if this decides to break down and move to the downside. As I've been saying the past couple of videos, I am still leaning bearish here in the medium term. Short term, I'm neutral, I'd say. I really think it could go either way, and I have options set up and plans set up for movement in either direction. But I am leaning bearish. So having said that, let's hop into the charts. Let's have a look at the weekly. Doesn't matter. We still have some time. The 2 dailies closing today, which is an important one. As you can see, well, I guess you could redraw this trend line now because it was an unsuccessful break of this rising wedge. So let's just draw that in. Oh, wow, that's so annoying how it does. I just want to... No, let me draw it right there. Okay, perfect. We're going to leave it right there. So it looks like it's back within this rising wedge formation, which we know that is a redistributive, generally a redistributive formation. This is confirmed again by a decreasing volume signature and a decreasing historical volatility, which isn't coming up on the 2 day because we don't have enough data. But if you look at it on the 12-hour, it has been contracting. And if you want more information on that, I urge you to go check out Crown's channel at Crown's Crypto Cave, as he goes over that quite in depth. I think he mentions it in today's video. He doesn't go in depth too much today, but go check out his channel if you're interested in know more about that. So building off of this rising wedge, since it is a redistributive formation, we can generally predict a move. And that predictive move would be this bigger drop here. It would be about a 32% decline on price action from the current price, which would put us in this fat target zone right here. So the way that I've drawn up these target zones is in a couple different ways, using different fib retracements along with volume support. As you can see, this wants to load. We do have that bigger, depends how you look at it, but if we zoom out and look at overall, we do have that slight mound of, or this little mountain of volume support in that region. So that, along with a couple different fib levels, I'm sorry if I'm gonna make this look really confusing, but I just want to pull out these other fib retracements here really quick. So let me explain a little bit what I'm doing here. So the basics of a fib retracement is you can draw it from the beginning of one trend and the end of the different trend. How you set these up is completely up to you. I have 3 different ones set up just from different points in the market. The main one that I'm using right now is a fib retracement, a reversed fib retracement, I guess a downside fib retracement from when this most recent downside action began. So all the way up here, you can see we have a local top. So from there to the local bottom that we had down here. So that's the main fib retracement. But as you can see, as the market moved on, we've had a couple, tops come in, a top here and another top here before this huge doomsday drop. So my other two fib retracements are drawn from those levels just to see what kind of confluence and levels that we can get, because generally these zones do overlap, and if the zones do overlap, that's just reinforcing it as a point of solid support or resistance. So we can do see, since these starting points aren't too far from each other, there is going to be probably a lot of overlap in the in the zones and stuff like that. So that's kind of how I drew these target zones. So you can see the target to the biggest move to the downside, which would play out, or which would represent the resolution of this rising wedge, would come down to this general area, which is between all these 0.618 levels, which is the golden ratio. This is always a buy zone generally, coupled with that volume support that we saw in this region as well. So that is probably my most bearish case. I do think if the bears do take over and want to pound it to the ground, along with if the stock market or traditional markets decide to plummet, I do think that's the most bearish target that we're looking for. And the reason why I don't think it's going to drop any lower, specifically, I've seen a lot of predictions out there that are saying that we might go set a new local low. I don't think this is the prediction. I don't think this is the truth for a variety of reasons, but I'm only going to be mentioning one to try and not make this video too long. And that is, guys, are you ready for it? Quote unquote, the most reliable or accurate, whatever you want to call it, indicator on Bitcoin has flashed a buy signal. We're going to the moon, boys. So if you actually looked into these articles, or if you've seen them, I don't know, I've seen them all over the place. So I'm always a little hesitant when I see them, but I decided to look into them for the first time. And then Crown actually does a whole historical analysis of this indicator. And it comes to show that it has been actually 100% correct every time it's flashed a signal on the daily. I mean, we could zoom out to the daily here. To the daily, still flashing a buy signal here. I mean, it's not flashed, it's probably confirmed at this point. But the interesting thing is with this signal is it successfully identifies the local low, but price action usually retraces by about 10 to 15% after this signal is established. So taking that 10 to 15% into account, because this is making me lean a little bit more bullish, hence why I have this bullish case drawn up as well. Since price action has been consolidating and hanging out in this relatively high area for the past weekend or past few days, I've been giving the bullish case more thought, and it is, the longer we stay up here, the more likely it is to move on up, in my opinion. But having said that, I also think we're going to see a resolution here in the next couple of days. So hopefully we catch a multi-$1,000 move in the right direction. But back to my main point, taking this buy signal into account, including that tendency of a 15 to 20% retracement, 10 to 15% retracement, I drew in this other level. Yeah, so that's the measured move right into this cyan box over here, this green box. So that lines up with a lot of these nice 0.5 levels. I think there's also a fat stack of volume support there. Let's have a look. Yeah, there's that fat stack of volume support here. Although I think if we are gonna, dump through, it's gonna take quite a bit of momentum to get through this volume support here. But I think ultimately, if we do fall down, we might be setting another low somewhere in this region. Yeah, but we do have quite a bit of support. We are technically sitting above some very thick support. Even if we zoom out here, we can see current price actions up here. Taking data all the way back from April, we are technically above the thickest of support here. So that's another point in the bullish camp. I think I'm not going to be leaning too heavily bearish until we see, a break under this level. So essentially, sub 7,200. I really want to see candle closure sub 7,200 to start leaning more and more bearish. But yeah, I'm saying bearishly, I could see us retrace all the way down here. That's worst case. I think it's very possible. I think it's more possible that we'll see a little bit of a retracement down into this zone. but obviously I'm going to be playing it by levels. This is just a general idea of where I think price action could move. And similarly to the upside, my bullish side of me is saying I want to see price action, struggle its way or consolidate or whatever, start closing above about, 82, 8270, 8300. Even, even on a more risky side, even closing above 8K, I think, anywhere above this moving average right here. Anywhere above 8K. Realistically, we do have a couple trend lines of resistance above that. That's why, playing it on the safe side, I want to see us above this 0.236 level as well. So if we can start closing candles up here, I realistically think there's nothing really stopping us from moving up into, this realistically, I want to say, mid to low 9K region, along with a take profit, probably somewhere halfway in this measured move, right around the peak of here. There's probably some volume resistance there, like, I don't know, 9.1 or something like that. Definitely a TP somewhere in between here, but I could see us moving up to at least this area, and if we break through, consolidate around here, I could see this moving upwards further. Although I am leaning bearish. This purple zone, as you know, if you've been watching my videos, usually indicative of a buy or sell zone. Right now, it's an indecisiveness zone. For the medium term, I want to see price action either crawl above this zone or close below this zone, and that will dictate if I'm going to be leaning bullish or bearish from there. Moving into some of the lower time frames, did I cover everything I wanted? Oh, let's have a look at the Stokes here. So the Stokes are curling to the upside. Let's go back to the 12-hourly because the trend line's drawn on the 12-hourly here. So we are currently curved to the upside. However, we are approaching this trend line here. So there is a possible rejection over here. We already passed the more immediate trend line, which is obsolete now. But we do have this horizontal here, which we've broken through. So that trend line is technically the next source of immediate resistance that we need to break through in order to continue this bullish push. However, from watching Crown's videos and doing a little bit of historical analysis, you can see that whenever we come into this band of red, like this, I like to call it, well, I don't know. This is usually the zone where we see a little bit of a turnaround, so we are in that zone now, so technically we could see a turnaround coming in, relatively soon. I'm interested to see if this trend line holds. I've heard a couple of very convincing cases that, a lot of people are betting on this trend line causing the reversal and stuff like that. I know people that trade only in the 12-hourly chart, and they've been relatively successful. So that's something to watch out for. Let's see if we can break the trend line or not. Let's get a quick candle look, what kind of candle we're putting on the daily here. We're just putting in another spinning top. So it could be a top, it could be a continuation pattern, nothing too special there. But let's move into my lower time frame charts here. Yeah, these are going to look a lot messier, but bear with me. Let's get rid of this. So we bring up the chart nice and big. So starting on the daily, Stokes are still to the upside. RSI still maxing out on that top Bollinger Band, so a bearish reversal can be expected, at any point, but that's what I've been saying for the past couple of days. It looks like we were forming a top over here with these really tight candle formations, but that got blown out of the water by this huge, bullish candle to the upside. We're putting another relatively, taller candle here, so this could be a continuation. Either way, we are looking, a top could come in any day. So I'm waiting for that hidden bearish divergence to flash to indicate that top to then be more confident in my bearish scenario. Moving down to the 12-hour. As I said, I know a lot of people who trade the 12-hourly and have been successful, so that bullish RSI divergence here is still being played out. No top coming in on the 12-hourly yet, so this is technically still in play. We could see more upside action. As you can see, the RSI is starting to peel its way away from that top Bollinger Band with the moving average catching up. So in a bullish scenario, I could also see this continuing to consolidate, maybe this line moving a little bit sideways, putting in a little bit of a flat top while this moving average catches up, and then this moving average might trigger another bounce up to max out the Bollinger Band. and then see, and then we'll assess from there. However, this is looking still relatively bullish until we see one of those hidden bearish divergences to indicate the top. Stokes are also to the top side. No major trend lines I can see here. We do have a top here, so I like to draw them from the top. So if that's a key level to watch, 88 on the Stokes. Let's put a horizontal in there. It's another potential for a top. So I will be watching that. But like I said, that this trend line is what has got me the most interested, is to see if we can hold or break that trend line. But we do have two sources of immediate resistance there, so maybe we will see a top coming in here in the next day, followed by that dump that we've been looking for, but who knows. 8 hourly, interestingly, on the 8 hourly we have been putting in a bearish divergence here. However, it hasn't really been resolved, so therefore, I mean, sometimes these divergences aren't accurate 100% of the time, so I'm interested to see how this plays out. We did get those two rather bearish looking candles forming, which I bet triggered this definitely triggered the bearish divergence, as this definitely looks like a top, but followed by a continuation. We are starting to move further away from these moving averages, which is a little bit concerning, as we usually like to see, I usually like to see a little bit of a test of these moving averages before the continuation of a move, but that's interesting. On the, talked about the RSI, that's not really playing out. I mean, it could also taper off and drop off again. Stokes, we did put in that bearish divergence to the downside, which actually reversed as soon as it got printed, so that'll be interesting to see if we put in maybe a double top or something and then turn to the downside, or skyrocket. 4 hourly putting in an even more immediate bearish divergence on the Stokes here. So the lower time frames are looking a little bit more bearish here on the shorter term. No divergences on the RSI, although those Bollinger Bands are coming in real tight. Seeing them this tight on a 4 hourly is a little bit, I wouldn't say it's room for caution, but usually when the Bollinger Bands get really close, that is, what is it saying? What word am I looking for? Insinuating? I don't know. It's usually indicative of a big move to come, as price action, hasn't really been that volatile. Hasn't been that volatile on the RSI. Don't get me wrong. We've had some good moves here over the weekend. The 2 hourly, we're seeing another bearish divergence on the Stokes. However, we do see a hidden bullish divergence in the RSI, indicative of that top there. So technically we are working off that hidden bullish divergence, so upside movement isn't abnormal here. Still staying above all of our major resistance lines. Haven't really tested them too much, but I mean, it's looking good right now. It's rather neutral, I want to say. Rather neutral, more of what we've been seeing the whole weekend. Nothing too interesting. I wanted to get that higher time frame analysis across because I think that's more important. But having that in mind, let's look at the hourly here. Hourly RSI is at the top Bollinger Band, whereas the RSI is moving clearly to the upside. Very steep slope here, so I wouldn't be surprised if we see this continuing up into the 80 or the this upper region. So yeah, that's how it's looking. These boxes, whoops, you might ask, I need to lock that down. These boxes, the green box was a buy signal from a trade that I made today. Entered probably around, I think it was somewhere around here. Yeah, I made an entry here. These have been the targets. This was target 1, which we hit. So stop loss has been moved to entry. This is target 2. Target 3 is up here. Each of these target zones also serve as a potential reversal or a pivot point for a short opportunity, implying the same targets on the way down. This is the first target. This is the second target. The more immediate or shorter term or intraday trades, I guess, I want to say to be confidently bearish, I want to see price action break below all of these, trend line supports that we've had. We've had this rising pink line for a while now that we've respected since the pump, this most recent local high. All the moving average supports also, I want to see most of them broken. I would definitely want to get below this 200 here. And the rest of all these trades are based on Fibonacci levels, and I'm glad to see that they're actually playing out. Maybe I'll make a video on that later when I feel more confident in the technique and I think it's worth sharing. But yeah, to the downside, I want to see us break most of these supports, and once we get into this, 75 mid 7500 region, I will be looking quite bearish. I will be looking to short, but as long as I want to say, are staying above this pink rising line of support, I am going to be relatively bullish for the immediate short term. And when I say that, I mean on an intraday level and on a scalping level. This doesn't mean, right now I would say at best I'm relatively neutral, because like right now we're in a volumeless abyss with possible moves in either direction, although this is starting to look more and more bullish. There's one more thing I wanted to mention, and this relates to one of my videos in the toolbox series, which has to do with sentiment analysis. And I think this week's sentiment analysis at a time like this is critical, because we are, like I said, at a point of indecision where it could really be going either way. And everyone knows that. Everyone's, even if you look at TradingView ideas, everyone's posting conflicting ideas. So I like to come into market sentiment. Please, if you don't know what it is, check out the video to get a general idea of what are other people in the market or in the space actually doing. Where are they putting their money? Are they putting their money where their mouth is, or are they trying to trick everyone? Sentiment doesn't lie, because this is calculated based off of where are people putting their money. So we can just hop onto the 2-day time frame here. It doesn't matter too much. The main thing I want to show you has to do, if we look at the 7-day time chart, I always said there was like a rule of thumb is if we're ever above this this green line, you're more prone to seeing volatile moves to the downside. But that obviously changes with time frames and stuff like that. Let's use the 2-day for right now, as that will be covering yesterday and today. So as we can see, shorts are actually there's way more shorts. There has been a bigger increase in shorts than there has been in longs, and this isn't necessarily the amount of trades, but the volume or the value of those trades. So this is telling me that people are generally short right now. They are leaning short. Most people are bears right now. But the next interesting thing here is, if you scroll down, this is something that you don't see all the time, is you usually see this red area being greater than this yellow area, and this yellow area is telling you how many of the shorts are hedged. And the fact that most of these shorts are hedged is telling me that even the bears, or at least the smarter bears, are prepared for a movement to the upside. Because essentially what hedging means is you are also betting on price movement in the opposite direction to minimize your losses, but also, impacting your profits. So exactly, the fact that a lot of these shorts are hedged, even the bears are starting to second guess themselves, because they could see price action in the opposite direction. So now as a bull, as an experienced bull, what I'm thinking is this is prime space for a bear trap, because you have all of these shorts. You have, first off, more shorts than you do have longs. That means all of this money or interest is tied up. As a whale, I want to liquidate it, and knowing that probably people that are hedging the people that are hedging their shorts are more experienced traders and know how to hedge their shorts. That leaves quite fertile grounds for a bear trap, in my opinion. So I do think we are going to see a little bit of a spike to the upside to get some shorts liquidated, the shorts that aren't hedged, followed by that downside resolution, or that downside action that everyone's been waiting. But I don't think we've seen enough of the upside price action just yet. And that could be a pump up literally to our target zone up here at around 8K, maybe even a little bit past 8, past, I wouldn't say it. This is probably as high as we're going to get. I could maybe see, a huge wick up into the 8.2K, anywhere up here. Something like this. I would say something like this move up again, but maybe with a candle closure a little bit lower or a candle closure right below or somewhere in this band of resistance to be then followed by downside action. But yeah, I think that's it for today's video. Let me know if you have any questions. Let me know what your ideas are. Let me know if you want Twitter updates. I started posting on TradingView a couple of my ideas. I have 2 up there right now, so go check them out. Although these aren't the most up-to-date ideas, they will be looking a little bit different from what I have on screen right now, is because I've tweaked them. I've tweaked them throughout the day, so as I figured out more about my Fibonacci method. But yeah, let me know if you're interested in learning these Fibonacci retracement methods. It's a method that I'm trying to use to generate intraday trades, because I do want to technically be trading every day. That is every weekday. I do not trade the weekends. And I wanted to find a reliable way to set up intraday trades besides just looking at volumes and moving averages, supports. So Fibonacci is interesting because it uses a lot of statistics, essentially, and is something that a lot of the more experienced traders are looking for everyday trading. Anyway, if I learn more about it and I think it's worth making a video about, I'll probably make a toolbox series on it. But other than that, have a good day, happy trading. I'll see you guys around.